Hey, what's up guys? Jeff Weibel here, and on this YouTube channel I've been posting a lot of Foundation Capital's properties that I have been touring, and you're going to be seeing more of those videos on the channel. It's the summer, what else are we going to post these days? But what I can show you guys is the real life real estate investing. So definitely not going to win any Oscars for the videos, but appreciate if you guys have been watching them. I really wanted to show the ins and outs of what real estate investing is. And in a couple of the videos, if you go back, you'll see where some moments pop up where we are getting more into the nitty-gritty of looking how many apartments can we put in this certain square footage even. So if some of these properties across Southwestern Ontario just have massive square footage, and if we get a vacancy, we almost don't want to re-rent it as the same unit layout that it was before. So that's just some of the how we've evolved over the years in Foundation Capital. During the pandemic, for example, we were always doing furnished apartments. Okay, we'll buy furniture, it would look great in these apartments. People were coming from far. They didn't want to go to Best Buy, Leon's, whatever, and shop. And we had the product, and we were able to put tenants in almost sight unseen just because of the nature of the beast. You got to really listen to the market and see what's going on. And then after the pandemic, furnished rentals weren't as important. Airbnb was dying off. We weren't necessarily doing a lot of Airbnb, but we sprinkled it in there, just listening to the market if we had some stagnant vacancies. But then, okay, so now no longer is furnishings working. So we removed that, and then we're seeing, okay, 2 bedrooms are renting for X. If you have a 2-bedroom, that could be 2 bodies, so like 2 roommates, and they both can probably afford that rent just based on an affordability model. And then we said bachelors in Ontario are just like creeping up there because that's almost like the lowest baseline that a tenant would pay is a bachelor. And then 1-bedrooms just seem to be this no man's land out there where if you're just a 1-bedroom, that could be a single person, and then a single person has to qualify for almost as much as a 2-bedroom. So the roommate situation gets us the higher rent versus the 1-bedroom. If you can afford a 1-bedroom by yourself, you're probably just gonna spend $200-300 more for a 2-bedroom. Okay, so 1-bedrooms become this no man's land, and then we were getting them vacant, but then we were looking at these 1-beds and we're like, these 1-beds are massive in certain cities. It seems like the further west you get of Toronto, square footage, when these properties were being built in the 70s and 80s, cost per square foot must have just been pretty cheap back then, because we're walking through them like, I think there's this 1-bed chopped up is 2 bachelors, and we just got to figure out the layout. So there's a couple of the videos on the channel where all of a sudden we're like, yeah, we could turn this one into 2 units. Now what does that do? So back to like what a person can afford, and also Canada not wanting anybody to own anything practically, they want you to rent. We're saying we can put 2 bachelors in the same square footage. Bachelor, let's just, for easy numbers, let's just say it can get $1,000, and we can get in for 2. Hopefully we can creep that up to like $1,250, but like $1,000, we'll get $2,000 in the same square footage as we would normally. Barely, luckily, get $1,450 just because it was a 1-bed, and 1-beds are just not attractive in Ontario's market. So this is some of the things that we're starting to look for. Any REIT investor, if you're already invested in the trust, what that's doing is we're just boosting the income to boost your appreciation returns. So that's some of the benefits that investing in our private REIT you're going to get. We're constantly looking to increase income, and eventually we'll put vending machines in the hallways, and we'll put a garden on the roof. I'll just continue, or solar. How much more can we squeeze out of these properties to maximize shareholder value with you guys that are invested? So if you're also wondering, and get your investments in this summer right now, so if you get an investment in before August 31st, you will also get a 2% bonus units right now. So anybody that invests, let's say $100,000, you'll get a $2,000 head start right away on your investment. So you'll be at 102 day one on your investment. And so on and so forth on that 2%. So a little incentive we have right there, because we have other properties in the pipeline that are going to be going into the trust. So go back, watch some of the videos on the channel, see the nitty-gritty of real estate, see if you own property out there, you're going to have these same problems. I'm not showing anything necessarily that if you're a landlord, you've never seen before, but We have volume. Whereas if you have a duplex and the shingles are falling off the roof, the furnace breaks, there's leaks going from unit 1 into unit 2, we have that too. Maybe not shingles as much, some of the properties, but we have volume and we can kind of, whack-a-mole the problem through our maintenance staff. And it's definitely ongoing. It almost feels like we work at a hotel, or at least our property admin works at the hello Foundation Capital, what's the problem? Always dealing with that. Whereas you guys won't have to. If you're the personal landlord, you are dealing with that, or you have management company in place, but they're probably still referring to you. Saturday night, you're having dinner, and then someone's locked out. What do you do? What we're saying is come diversify in Foundation Capital, because we have multiple buildings across the portfolio, whereas you might only have one, possibly two properties in the same city. I don't know about what city you're in, but sell your properties and take the profits, or sell one of them and diversify and put some in Foundation Capital. We offer 15% plus targeted annual returns on your money. So 15% plus targeted annual returns for doing nothing, or take all those calls, have those headaches, and then you're gonna pay a real estate agent on the purchase, pay a real estate agent on the disposition of your property as well too. All the other capital costs that real estate investors like to ignore, that fridge goes down, dishwasher goes down, which just eats into that very small, if you're in Ontario, small cash flow that you would even have per month. So that's a good avatar of people that we have coming over to Foundation Capital, are people selling off their properties. We actually have real estate agents, and if you are a real estate agent, that always coach their clients, so they'll get the commission on selling the duplex, triplex in wherever, Southwestern Ontario. And then now the clients have this problem of, I got all this money now, what do I do with it? And then the agents are even like putting that in their ears to come over to us, and we're offered the agents referrals as well too, if they send the bodies, the investors, our way, and we're able to close on it. So if you're a real estate agent, there's some extra cash in a tight market where it's hard to do transactions right now. You can make some cash by sending your leads over to us, and if we close on it, we'll make sure you guys get paid. So that is kind of what we got going on right now. It was great to see the guys. We went down, we did a whole property tour. Mitt and Pearson came down. If you guys want to pick their brains, they're the other trustees in the corporation. You know me, I'm kind of out there. I'm purchasing the properties for the guys. I'm dealing with all the high level landlording stuff. I'm raising capital, but those guys are also the former CPAs. So if you have any specific tax questions, because any of your investments in Foundation Capital, if you take the 7% cash flow, which is like the rent from the tenants, you will have return of capital. So you will not pay taxes on that until that's all returned back to you. So we'll take about 14 years on an investment. And you can text me about this, or message me on Instagram about it. And then you still get the 8% plus appreciation, which makes our 15% plus targeted annual returns. So you get 7% cash flow, and you get 8% plus of the building upside. That is our target every single year. And you don't have to deal with tenants and toilets, and you don't have to deal with anything. This is what the rich are doing. They're just investing in private real estate. It's very stable. It's an asset class that's needed in a, let's not call it a housing crisis, but we have a commodity of apartments, and Canadians and new Canadians coming to Canada need apartments. And this is what you're investing in a pooled trust where we manage it. No better asset class right now, in my opinion, out there, and then investing in private real estate. So if you got any more questions about that, you guys know I'm always quick to DM on Instagram, message me there. And yeah, get your investments in. 2% bonus units right now in the month of August, 25 in case you're watching this video in the future. But we'll do future promotions here and there. But yeah, let me know if you got any other questions, and we'll see you guys in the next video. Bye.